Happy Monday, everybody. I hope you had a great weekend. Last week was a short week, but it was a busy one. Even with just 4 trading days, investors had plenty to digest. Rising global bond yields, softening U.S. labor market data, AI-fueled rallies, and the latest on tariffs and Fed expectations. Let's take it day by day, and then we'll preview this week. It's usually a quiet week, the week following jobs week. Let's just see, because we haven't seen a lot of those. So today is September 8th, 2025, and this is your Monday market update. Markets stumbled out of the gate on Tuesday as global bond yields surged. The UK 30-year yield hit their highest level since 1998. It did stoke inflation and fiscal worries here abroad, and then it spilled over here to the United States Treasuries. So the Dow fell more than 250 points early before stabilizing. Tech weighed heavily, led by NVIDIA, which tumbled more than 4% on supply concerns before rebounding after management came out and denied those reports. Midday recovery in the Mag 7 stocks pulled the broader market off the session lows, but sentiment remained cautious with tariffs and trade uncertainty lingering. The Dow was down 0.5%, S&P 500 down 0.75%, and the Nasdaq was down about 0.5%. Equities opened stronger on Wednesday, boosted by a favorable antitrust ruling for Alphabet, which sent Google up over 9%, sparked a mega cap tech rally. The JOLTS report, however, showed job openings at their lowest level in a year, raising labor market concerns. Fed commentary was mixed. Atlanta's Bostic leaned dovish, noting tariff uncertainty and hinting at possible September cuts, while Minneapolis's Kashkari, he emphasized inflation risks. By afternoon, stocks gave back gains before AI optimism resurfaced, highlighted by OpenAI's share sale and Apple and Google's Gemini AI partnership. And that lifted indexes into the close. The Dow was flat on the day. S&P 500 was up 0.5%. The Nasdaq was up 0.75%. Thursday brought more jobs data with weak labor market data from ADP, plus soft ISM employment sub-index sent bond yields lower and fueled expectations for a Fed cut this month. Markets briefly dipped on the DOJ subpoenas and the Fed's Cook investigation. All that's still going on, but it regained momentum after the Fed nominee Mirren reaffirmed central bank independence. By afternoon, AI enthusiasm resurfaced as the White House AI Education Task Force meeting, where Amazon and Microsoft pledged support for new initiatives, that capped off a broad rally and new all-time closing high for the S&P 500. The Dow was up 0.75%, S&P up 0.75%, and the Nasdaq was up 1%. Friday, Jobs Day, brought the news everyone waited for: a weak August jobs report, up 22,000 payrolls, unemployment at 4.3%. That cooled the risk appetite, and it did pull stocks off of Thursday's highs. Yields fell on rising rate cut odds after a knee-jerk bad is good opening with a strong buying action. At their peaks, the S&P 500 was up 0.5%, the tech-heavy Nasdaq was up over 0.75%, and the blue chip Dow was up about 1/3%. Did not last. Broadcom's big post-earnings pop helped tech, but it wasn't enough to lift the tape into the close. Dow closed down 0.5%, S&P down 1/4%, and the Nasdaq essentially flat to slightly lower. For the week, the Dow could not hold the gains. It closed down 1/4%, S&P up 1/4%, and the Nasdaq up 1%. Overall, despite rising global yields and soft labor data, markets shook off recession fears. Investors focused instead on AI-driven growth stories, the likelihood of a September Fed rate cut, and the resilient corporate earnings. Gold pulled back from record highs while oil stayed range-bound in the low 60s. That, as we know, is history. So let's look ahead. Even though the week after jobs week is usually quiet, this week is shaping up to be another pivotal week. Today, we're going to get the New York Fed's one-year inflation expectations. We'll see if it gets any airtime. Sometimes it does, sometimes it doesn't. But again, we're focused on inflation this week. So it seems that as we get closer to the Fed September meeting, anything inflation is going to be in focus. Tomorrow, NFIB, small business optimism. I cite this one often. Small business, again, is the backbone of the economy. We're going to hear what they have to say. Plus, preliminary payroll benchmark revisions from the BLS that could imply sizable downward revisions to job growth. Big news, obviously, from what we saw last week. Wednesday, we'll start the big inflation data parade with the August Producer Price Index, that's PPI. And Thursday, we're going to get the big one, August CPI. Numbers are still expected over or nearly over that 3% mark, still way over the Fed's 2% target. And Friday, University of Michigan consumer sentiment and inflation expectations with Fed heads in blackout ahead of the September 17th Fed FOMC meeting. Markets will take their cues directly from that data. A hot CPI print could challenge a rate cut narrative, while a cooler reading would cement expectations for easing. After a shortened but eventful week and a quiet weekend on the economic and business front, at least, stocks are sitting near record highs, powered by AI optimism and expectations of Fed cuts. This week's inflation data will likely set the tone for September and could determine whether the soft landing narrative we've been talking about, whether that holds true. So before we go off into the new week, I want to remind you of some of the important things that are going on in this market. Every week we talk about what's moving this market and what will determine the next direction. The following are just a few things that I keep coming across to just keep these in mind as we go into the final few months of the year. NVIDIA, when we talk about a lot, it is basically eating the world. The world's largest company had a market cap of 4.4 trillion as of the end of August. According to Bespoke, that's roughly equivalent to 6 Walmarts, 38 Nikes, or 94 Fords. And NVIDIA now has a bigger market cap than the entire equity markets of 5 of the 7 G7 countries. So that's what we're going to watch. That's why we watch it and we talk about it so much. And for those who are focused on the ETFs, the exchange traded funds, are there too many of them? For the first time ever, Morningstar calculates that there are more publicly traded ETFs, over 4,300 of them, than individual stocks, about 4,200 of them. In the first half of 2025, 469 new ETFs were launched, which is up nearly 50% from last year and is 140% above the 5-year average. That's all according to Bloomberg. And in that light, Mark Rowan, the CEO of Apollo Global Management, he said that the decline in the number of publicly traded companies from 8,000 in the 1990s to about 4,000 today means investors aren't actually getting the investment benefits of the American economy. It's just another something to keep in mind. So as we get started, I want to remind you, as we get started into this week, I want to remind you again, this is the In the Weeds weekly report. In the long run, the place that we focus on is your goals. It is something that we need to keep in mind as we watch all of this unfold. And as usual, everything can change with one post on social media or even some court case outcomes. So stay nimble. Check back in on the ongoing series on the sandwich generation on the Friday planning videos. If you've missed them, check them out on my YouTube channel or let me know and I'll send you those links. Last week's video is still up on the website. I hope you all have a great week and we'll see you soon.